This conference will now be recorded.
Yes, good evening, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 9:07 p.m. on April 5th, 2020. This is our regular Sunday week, the Sunday strategic webinar, getting people ready for what's coming this week, for the coming week, or for the following weeks, but primarily to see what the short term and the intermediate term view is on the trading side, on the markets, keep people abreast on some of the more important developments that happened over the weekend and some important stuff that's coming up this week. Full disclosure, this is purely for financial education, not for solicitation or advice. For people who have other engagements, family and stuff, whatever it is, session will be uploaded to the YouTube channel, Clueless Day Trading YouTube channel, and listen to it at a later time tonight. And of course, prior to uploading to the YouTube channel, I go ahead and upload directly on the real-time Twitter feed for people who are interested in catching up faster. And it's a link for GoToMeeting, the platform that we use for our social interaction, trading interaction, whatever you call it, our online interaction, webinars. So just click on that link that comes up in about 15 to 20 minutes right after we finish this session, and you can certainly click on it and listen to the whole thing. All right, let's get into it. So really not much to say. We know the same old song and dance. My real-time Twitter feed basically piece by piece breaks down everything that's happening with the markets. If you want to understand what's going on with the markets, just go to the real-time Twitter feed. It takes you about, if you want to see the whole day stuff, well, we take you about 15 minutes to scan through it, comments, charts, individual alerts, what we're doing, and that's it. There's people, a couple of couple of myths that I just want to throw out the window. You want straightforward black and white answers in an extreme volatile market that we're going through, things that we have never seen in our lives? We haven't. The type of market we're going through, we have never seen in our lives. And ask somebody who's been in the market for 50 years. Okay? So you will never get any black and white answers. Will you make money in the middle? Absolutely. We are. Are we getting hit on certain days? Like on Friday, on certain stocks we're buying and they're going down? Great. And now futures are up almost 80 points. So we're probably going to open up 1,000 points. Who knows? Limit up, maybe. Limit up. That means we're going to be up more than 5% on the indices futures. So everything that you bought at the bottom on Friday, you're going to sell them right at the market open on Monday. Pretty easy, huh? Yeah, it's only easy if you bought some stuff at the bottom of the market, or at least this short-term multi-day bottom in the market, right here. That was 145. Market did rally quite a bit at the close. So we closed up, we closed right here around 4 o'clock, right there. And this is exactly where we are, because that's exactly what the next level of resistance is coming in. Are we going to get up there? Ask God. Only God knows the answer. Okay? Technical analysis will only give you pathways that you need to drive on. The rest of the driving you got to do. And it's a very curvy, twisty, extreme volatile market, which are pretty much run by manipulative, that's what I call it, algorithmic high frequency trading programs that are moving on the basis of coronavirus fears, the coronavirus pandemic, on the basis of oil prices moving up and down thanks to the Saudis and Russians, or no thanks to the Saudis and Russians. You know, from my previous webinars, President Trump finally has gotten on board on it, pressuring them to cut out a deal, and it's coming. They were supposed to have an OPEC meeting on Monday, but as usual, the Saudis and the Russians, bunch of emotional freaks, if you ask me. Governments, I should say. Well, governments do reflect culture, right? Oops, I shouldn't go any further. Somebody's going to call me a racist. So bottom line is, that they had another spat. Foreign ministers going at each other, calling Putin a liar. Putin's calling them a liar. Bunch of morons. And in the meantime, so those are things driving the market. So the two primary immediate catalysts that are driving the market: the coronavirus situation, which, by the way, on the weekend had a lot of positive news. Italy had its lowest number of deaths. Spain death rate is coming down, thank God. New York hospitalization rates are coming down, and two-thirds of the patients who were admitted in New York hospitals have been discharged over the past week, which is good signs. I think the curve is starting to flatten, and you're seeing that in the form. President Trump was fantastic at the press conference that I was listening to. That's why doing the session at 9, and some positive glimmers of hope. And in the meantime, the negative sentiment in the market is at levels has never been seen. Really hasn't been seen. Not even in 1987. Was last seen, not even seen. It's like out of control. I can't even explain it. And there are charts out there that I saw over the weekend. I mean, you're talking about, and I'll try to put some out. I don't know if I did over the weekend, but like trillions, like $4, $5, $6 trillion sitting in money market accounts. And this is not just mom and pop, like shit scared. Excuse my French. This is institutional money managers who should know better. That the market always, 100% of the time has a reflex bounce, which might last hours, which might last days, and in some cases, which might last weeks. I'm not going to go that far. But those days and those hours that the markets are up a lot, like now, futures are up 75. I'm projecting, that's my belief, that's my thing, that the futures are going to open up, are going to pretty much be up there. Unless something happens overnight. What more could happen? We know the worst of the worst. You can't turn the TV on. You can't turn the media on. You can't turn your head on without hearing terrible news. But what about the glimmers of good news? But that's what happens. So bottom line is, let's say the market opens up. Great. Stuff that we dollar cost averaged on, stuff that we trimmed a little bit, but kept, they're going to be up a lot. So this is the type of tactical bull market or the that you got to deal with. Not a straight line up or down. Oh, where's the bottom? Told you where the bottom was. For now, the bottom was March 23rd. When we got into 2180 and 2200. That's the short-term bottom. And yet, at the same time, every single analyst, not analyst, every single market analyst, other than some very smart ones, are saying, oh, we have to retest. We have to retest. Dude, we know we have to retest. But does it have to happen this week? I mean, does it take a child to say, oh, we'll have to retest? We don't even. And the more they talk about it, the more we will not retest those lows. And we'll probably do that in a bit. But for now, I'm talking about what's happening this week, what will happen probably the week after. I don't have any long-term projection for you guys. Even though I can see some pictures, but I'm not even going to go there. Why? Because the market is completely, chaotically, emotionally deranged at this point. Okay, so no major long-term projections. So we'll just look at some short-term ones and shut this webinar up. So that's the only way you got to play this market. You got to do day trades. The market is forcing many swing traders and long-term traders to be day traders. You don't like it? Don't be a trader. I hated it when these algos mess around with the market for sometimes no valid reasons. Worst options distortion prices. I feel like putting a fist through one of my screens. What's that going to do for anybody? Nothing. So I started to stay calm, walk away from the screens a little bit, come back, look at it and say, okay, should I dip a little bit? You know, bought those options at 4, now they're at $1. Should I add a little bit more? Okay, maybe add a little bit more. Depends. Stocks that I like, I keep on adding. I'm going to look at a few of the stocks that I like. I like a lot of stocks. I don't have the money to buy all the stocks. Okay, but so I'm ready. So markets open up 75, 80 handles. Cha-ching. And all of you guys who freaked out, all of you guys who got so messed up in the head, like, oh, I can't do this anymore. That's the only reason probably why there were only 2 people on the Sunday webinar. That's fine. This is what we need. We need complete apathy at generally a trading bottom in the market. We want complete apathy. We don't want excitement. We don't want happiness. We want complete apathy, despair. And we're getting that. And through social media and platforms that we use, we can feel that is happening. I can feel that happening within my members. And that's okay. You still have time, but you have to act quick. Nobody is happy at extreme volatility. Everybody's sad, like it's all over. Okay, it's all over. We're all dead. You only have to be a trader when you're dead, right? You can do virtual trading from heaven or hell, right? Okay. So bottom line is that we're getting it. We are getting serious apathy. And it's happened many, many times for different reasons in our lifetime in the stock markets. Whether it's massive financial fallouts, whether it's the 2008, 2007, 2009 type of massive collapse, like nothing will ever come up, that's it, it's all over. Whether it's the SARS virus, whether it's the MERS, that was another one we went through, nothing as big as this. All kinds of stuff. But signals always stay the same. But it is a bottoming process. I have walked you guys through and through with this. I am not going to repeat that on this webinar because I have spent hours, days and days showing that, explaining that on my previous webinars, on my Twitter feed. So I implore you all to spend some time going through that if you still want to make money. Because I'm going to keep on making money. I'm going to get hit certain days, but net, I'm making money. I'm showing you stocks even on the worst day in the market that are making money. Okay, maybe you didn't get a chance to own it. Maybe you don't have the capital to own it. Fine. Then at least you learned something. But most importantly, my biggest strength that you all have to understand is to try to guide people at the worst times in the market. That's where my biggest strengths are. Like they say, everybody could be a friggin' genius in a bull market. Oh yeah, by that it's going up. The whole Facebook, yeah, it's going to go to $10,000. Yeah, does it take a genius to say that? And the next day it goes up $4. Hey, I told you so. But what takes real skill, what takes real character, what takes real knowledge, what takes real discipline is to guide people through these type of charts and say, hey, that's still an inverse head and shoulder from a technical standpoint. Hey, that's still a cup and handle. Hey, we're still holding about the 23.6 fib. Hey, we're going to go to the 50 fib. Hello. The 50 fib will act as major support. Hello. That's right. Want to be a short-term trader? You can make some money off these bars. Hey, look, the pattern doesn't complete till around 26.36. So that's my strength. So, some people, it doesn't do with respect. No one needs to respect me. No one needs to respect me. I don't know. What do I have to do to respect you guys? I mean, what have you guys done for me? Okay, other than being members. So don't have to respect me. Just try to learn from all these things. Respect the charts. Okay, please. So saying all that, let's start off with this picture here. So it's going to be another volatile week. All right, there's going to be things coming from left field, right field, all kinds of stuff. Companies cutting guidance. We're coming into the the beginning of the earnings season. There's going to be lots of opportunities, lots of hard breaks. But as speculators, listen, we're all risk traders. We don't know what's going to happen one thing to another. We're just playing the probabilities of, oh, this might happen based on this and this and this. So once you get that through your head, you speculate. This is not a game where you put $10 down and say, okay, I know it's going to be $20. No. The probabilities say, let's say the 70% probability that you'll make 20 bucks on it. So that's why you put the $10 down. You don't want to do that? Never, ever invest in the stock markets, and certainly never, ever be an options trader. Okay, let's move on. So at this point, I'm still looking at the same picture. This is, let me get one of the lines here. Yeah. So this is basically the promised land, all right? The 50 fib. On the E-minis, that's roughly 2786. Let's call it 2780 or so. Max upside, that we call max upside, i.e. maximum upside. How far? How quickly? Maybe by the end of the month. Maybe by the middle of the month. That kind of time frame. I'd say middle of the month. Middle of April. Somebody says this week. Yeah, it could happen. It's Easter Sunday. Good Friday. Lots of stuff. Good things. So 50 fib is the promised land. So far, there's a bunch of things that I showed, and I don't have time to repeat that tonight because I want to keep this reasonably short, is the VIX. Go to the Twitter feed. The VIX is still pointing straight down on the weekly. So what the hell's going on? Now, it is just beginning this trend. I will show it because I know many of you who are really keen on it but too lazy to look at it will forget to look at it, and then you won't know what's going on. And then I'm going to feel really terrible about it. No, I won't. You're the one who's going to feel terrible about it because you didn't follow through. So I will show it. So the 50 fib is at 27.83. So that's roughly about 200 points. That's your promised land. Okay, hallelujah. You have been saved. So traders who are trading this type of volatility will make a lot of money. Traders who are chasing this move, which inevitably many traders will do, and the so-called analysts are going to come on and say, oh, it looks like it's really going higher, will get their head banged and smashed in pieces right when it hits that 50 fib. Mark my words. So you want to be a buyer at these levels. And these are the levels that we have been going through over the past week. Or even since we bottomed on the 23rd of March. In the meantime, stochastics are getting overbought. This is not rocket science. This is not rocket science. I'll repeat it again. This is not rocket science. It will go up here, and then it's going to move sideways a bit, consolidation, because there'll be some good feeling, and the market's going up there. And then the market's going to pull back again. Just the way it did here. Just the way it did here. It's always the same story. Now, technicals don't work exactly when we think it's going to work, like within the minute or the day, but they inevitably work. And that's exactly what's getting played out right now as we speak. This is the swing trading chart. This is the daily chart. You guys all know by now. So if we go up, let's say 200 points, so you're looking at a Dow Jones Industrial Average max move 1,600 to 2,000 points. Lots of stock will go up a lot, and the overall market will go up about 2,000 points, and you're going to hit a boom, a red roadblock. Can it punch through it? Sure it can. That's why we have this green line here, which is at around 28, let's call it 28.80. That's another 100 points from here. That's called an overshoot. Happens every time. There's an overshoot on the downside. There's an overshoot on the upside. And why does that overshoot happen? Because that's how humans are. They're either manic, depressive. Now the machines are running the market, so the overshoot happens because either there's a big fat short squeeze, because the last of the stubborn algo, just like a stubborn human being, finally says, "Oh my God, I can't take this anymore because the market's killing me. It's going higher, so I get stopped out." In other words, they're forced to buy, cover their shorts. That's what we call a short squeeze. Or when things collapse, it's like, oh my God, I can't take this pain anymore. It's all over. Why was I born? Why am I doing this? Why did I ever look at a chart? Okay, is when the undershoot happens. So undershoot, overshoot, same story, same reaction. Every action has equal and opposite reaction. Whether you guys believe it or not, I don't care. I've seen this happen hundreds of times. And the point of maximum frustration, the point of maximum despair, the point of maximum I can't do this anymore, that your voice in your head tells you, is the point of where you get the real tradable bottom. We got that here. And even though the markets did nothing technically wrong, and I said that to you guys over and over and over again over the past week, even though I didn't like these point drops. Of course I didn't. I'm that long. I told you, technically, it is not broken. And that is exactly what is getting played out right now. Will I eat my words tomorrow morning? Maybe, but at least I have an opinion. Like Dick Tracy, the famous philosopher, once said. Dick Tracy was a great philosopher, right? Just kidding. Dick Tracy, the cartoon character, like he said, a man without an opinion is no man. So if you don't have an opinion, sorry. So there you go. So that's it. I have an opinion. I'm sticking by it. My opinion is based on technical readings, and let's see. So basically what's happening here is, you might want to look at it, is a cup and handle. High extreme volatility, of course, 600 points up, 300 points down, big ramp ups at the end of the day, all kinds of funky stuff. That's in handle, and the handle's getting is breaking out as we speak right now. New futures up 75 points. That means we should open up about 600 plus points on the Dow, if not more, 650 to 700 points tomorrow morning. Now, this red line here, for people who are kind of colorblind maybe, or maybe not, is called the downtrend line. Why? Because it's downtrending, right? Right to left, it's going down. That's an uptrend line. Left to right, it's going up. So it's a downtrend line for people who don't understand anything about downtrend lines or uptrend lines. So what is the market doing right now as we speak? And was pretty much, looks like it was going to do it, and I told you guys that too, that there was a good probability it was going to do it, is there. So let it move. Let me just get my arrow back. And okay, that is better. So here's your downtrend line. And this chart wasn't drawn to satisfy my ego or your, and to tell everybody, oh my God, how great is this chart? This chart was drawn days ago. You guys know that. It was drawn days ago, if not weeks ago. So this is what's getting played out. We have broken the downtrend line. So is that a guarantee? No, it's not a guarantee. It's just that it's a strong technical bullish catalyst that the downtrend line has been broken. What's the next level of support? I mean, resistance, 2638. So by the time the world is waking up and saying, oh yes, looks like everything's really good, and maybe the bottom of the market is because Corona beer, the worst beer in the world that makes billions of dollars, even if you put a lime in it or lemon in it, whatever, it's like piss water. Sorry for people who are Corona lovers, not the virus, the beer, I mean, shut down their factory to make industrial masks and ventilators and stuff. Good for them. Good for them. That's a very good move in Mexico. Maybe that's the market bottom, that Corona beer finally shut down for a bit. So people wouldn't waste their hard-earned money drinking yellow water. Okay, next topic. That's just my opinion about Corona, both the virus and the beer. So saying all that, this is a cup and handle. Keep it real simple. Cup, handle, and cup and handle generally break out. Next level is right here, and you're gonna get a thump. So what happens here? Well, we could get this. We get another 700-point pullback, or 1,000-point. More, it's actually more like 1,000-point pullback, and maybe it goes like this for the next week or two. So what do you gotta do? You gotta buy the technical levels, and you gotta buy and sell the technical levels. It's called range trading. So here's your cup. Here's your handle. Here is what we're breaking out. So now the market is kind of moving sideways like this. This has happened, by the way. Happened last year, happened the year before. For the next 2 months, let's say, we could be moving back and forth within a range of 1,000 to 2,000 points. I'm not even going to bother asking if you guys are ready for it. If you're not, like I said, don't be a trader. This is probably what's going to happen. And then either the market will decide to come back and retest the lows again, or the market says, enough is enough. We want to go straight to the promised land. My gut feeling tells me that once we get a stabilization of the oil deal, which should be coming by the latter part of the week, because I think the bozos, the Russians, and the Saudi governments are finally getting their act together, because Trump, Harold Hamm, and all these big power hitters here, oil men, so, may his soul rest in peace. T. Boone Pickens is gone. He was a great oil guy. He would have said straight out on national TV, shoot the bastards, he would have said. Our boys die for saving Saudi Arabia. And the Ruskies have used their powers in Syria and other parts of the world to kill our boys in military conflicts by supporting those governments that we oppose. So, great friends, yeah? Sure. So bottom line is that he would have said, put tariffs on. Harold Hamm said that the other day. Tariff the oil thing. We've unfair trade practice in China. We tariff them to kingdom come. Why can't we put a 20% tariff on imported oil? We got a lot of our own oil. Yeah, they would have learned the lesson. But I think They're finally getting the message that we're not going to be sitting around and taking the beating and the torture. Okay, and I said this weeks ago, guys. You know that. I don't care who agrees with me or not. So anyway, the bottom line is, so yeah, so I have a feeling that this will hit that level in the next week or two, or faster. It takes so much faster. In the meantime, the markets will go back and forth, 1,000 points. Let's look at the near-term charts. On how to trade the market. Repeating the same old story again. This is the chart that you need to really print, save, print screen on your screen, save, and or just track and trade. This is really nothing to say. This is the Fibonacci retracement, short term, going back to, ladies and gentlemen, the 12th of March, or to be specific, going back to the 15th of March. 15th of March. And it is a very, very precise, symmetrical, predictive as well as predictive chart. Here's your support. Before it was resistance, now it's support. That's the dotted blue line. Nothing difficult to understand. If this breaks, we're going lower. If it holds, we're going higher. How much higher can we go? We hit the first resistance right now as we speak. Futures are up 67, and look what it did. The markets obey clueless a trading charts. You think I'm kidding? I'm half joking. They do. These charts weren't drawn 5 minutes ago to satisfy everybody and make myself look good. They were drawn weeks ago. And we have, as I've mentioned, we have a few futures traders amongst us who use these charts very actively throughout the night before the market. And so that's it. So best case scenario, 26.38. There's a gap fill here at 26.52. We shall see. In the meantime, the markets are going to be very choppy. Any questions while I'm moving along? Okay. If you have any questions, I suggest you email them to MBS Mohammed bin Salam, okay, or Putin, the bareback rider on the horse, flexing his flabby muscles and shooting duck, whatever. I suggest that you send an email to them and tell them not to keep on pissing us off. Okay, please do that. And in the meantime, if you have any questions, then certainly ask me on the technical side. Because those bozos, if they can reach some sort of basic understanding, they can move global markets and oil prices a bit higher and stabilize the global markets and the US markets, and we'll all be a lot better. Okay, this is the other chart that I follow. This is the 15-minute chart. And again, it arrives at the same level as the best case scenario for tomorrow, maybe Tuesday, which is roughly about 400 points from here. Because if we open up 70 handles, we're already opening up 560 to 600 right at the open. And I'm going to be selling a bunch of things that I bought on the cheap with the P&L bright red on Friday. That's the way real traders trade. Any questions which you're not emailing MBS or Putin? Do you have any questions for me yet?
Not yet.
Okay, good. So this is the chart which basically keeps, I should say keeps me in the game. Well, I have no choice. I don't have a sugar daddy. I don't have an external employer who writes me a check. I have to, whatever it takes, make my own money. So this is a chart that, you know, I was going to say keeps me in the game, but I'm always in the game. I have to be, and I love it. The game makes me a better person. And that game is called the game of trading. So this chart alone is so exciting. It's crazy. And I explained this in the last webinar. I'll explain it again. Really simply. Let me get a nice bright color for you, ladies and gentlemen, which is this. This is the VIX coming straight down. The VIX was 85, even though the markets haven't gone up a lot, has gone up quite a bit from the May 23rd lows, but lots of volatility. This has been going straight down. Well, it did bump up last week. I shouldn't say that. It's why you see this long wick, long tail hammer. Red though, but still. And this is a straight down hammer, and this is about to happen, which is the weekly. The weekly. This gives us a kind of a peek into what are the markets expecting over the next 1 to 2 months. It's telling me that over the next 30 to 60 days, if not sooner, you're going to see the VIX come down towards 35, certainly towards 40. And this is what's telling me there's a high probability of that happening, because the same stuff happened after the December 24, 2018 Christmas Eve massacre, when again, the world gave up on the United States of America. The world didn't. The Americans gave up on the United States of America. We are our biggest enemies. Forget the rest of the world. Like I always say, and some people like it, some people don't like it, but who I care. Waving a little flag and screaming, make America great, or I love America, means nothing. You got to show your real patriotism. You got to support the U.S. financial markets. You got to make your kids smarter so you don't have to hire foreign workers to do jobs. There are 7 million high-tech jobs waiting, and we can't fill them because our kids are, in general, stupid. They don't want to study. Okay, so you want to make America great? You really want to make America be the ultimate power? We are still. Make America smart again. Write that down somewhere. Okay? You don't get great by wishing yourself great. You get great by doing the things that make you great, which are very, very tough things to do, unpleasant things we need to do. It's the same thing as trading. Okay? All right. So, bottom line is, this is what happened. Now, this is happening on a more amplified level because of what happened with the coronavirus crisis, and the market dropped 34% in 1 month. Every time I say that, and I've been in the market for a while, I'm just like, what? And people out there, like the serious market veterans, they're just like flabbergasted because they probably don't understand the new charts. They don't want to accept that algorithms are running the whole show. They keep on rehashing the same thing. But we'd like to look at the market in a slightly different way. So the bottom line is, if this crosses down, that's the summary, the gist of this chart. If this crosses down, so overall, in between intraday volatility, down 300, up 400, down 300, up 400, if this keeps on coming down, the markets will, on the other hand, keep on going higher. How much more can they go? Well, those charts have shown you reach the promised land at 2783, then possibly an overshoot to 2800. We shall see, one step at a time. I am certainly not overtly bullish on the technical basis. I am looking at the bigger picture, and I'm looking at the shorter picture. I am trading the shorter term picture, which is a week to 10 days. That's it. Week to 2 weeks. I cannot make a long-term projection at this point because of the craziness in the market that is happening. Okay, so that's the VIX chart. Very, very important. And let's move this out. Okay. Shorter term picture. I've shown this. These charts are being shown on. These charts are being shown on Quad, what I call the Algo HFT platform. This is a hourly chart going back to the lows. Very, very important, people, to keep these things in mind. I don't care what stocks you're trading, you'll get hit if you don't see what's happening in the front side, which is the SPY, the SPX, the E-minis. Here's your bottom, May 23rd, ladies and gentlemen. We were in there. Big gap. Markets go up 2,000 points. Then it kind of hits that top, and we're thinking, okay, now it's going to go hit that 2,700 level. Then it goes into a trading range. That trading range broke a couple of times, but held this gap. I've shown this chart quite a few times, and every time you see a shaded box, it's a gap. Which reminds me, I put out with some of my newer members who are far more passionate and hungry than anybody that I've seen to learn, paid advanced coaching session students. I put out one of the best ones. Every session is almost great. Rejuvenating for me, reinvigorating for me. It's on the Twitter feed. It says gap fills. It says did it this morning, and I'm going to stop putting up those advanced coaching sessions for the next batch of returning advanced coaching students and stuff, because they're doing you guys a favor, because you guys are not paying for it, and they're doing you a favor and giving you some welfare charity by allowing me to put that up there for others to learn from, because they're paying a little bit of money to learn and expand their skills, and I'm putting them up there. Well, it's not fair to them. So going forward, I'm probably not going to put them up on the real-time Twitter feed. I mean, for everyone to get, because we don't want to be freeloaders, right? That's not how America was built. Freeloading? I don't think so. So new member ACS advanced coaching session, technical gap fills and patterns. I put it up there. Certainly listen to it, because it explains all this stuff very, very well. So bottom line is, despite all the volatility and the frustrations that we all have to go through, I've been looking at this chart. I was looking at this gap. If this gap had broke this red line here, for people, hopefully by now, what a red line is, it's called support, was at 238.94, but we held that gap, and it's almost a triple bottom. 1, well, 2, 3, it's a quadruple bottom as of Friday. That's a pretty good line of support. Stochastics are oversold, but they have a tough time going up because of these random sell programs that hit the market at certain times. So again, what's the upper end of the gap? As we speak, we are hitting that after hours. This is not a real-time chart. This is let me see if I can put it real-time. Real-time meaning showing what's happening right now. Pre-post market data. No, it's not populating it yet. It closed at it was closed as of Friday. So yeah, so we're up here right now. So it's hitting another gap. If we break out over that, that's, like I said, we'll hit the 263 level. So if you're SPY traders, you're going to make a decent sum of money tomorrow morning, and you'll make a lot of money if we can break out over the gap. The shorter term VIX picture is mixed. One second, trying to barrage through all this stuff. Shorter term VIX picture is, this is the daily VIX. It's breaking, but it's starting to get quite oversold, just so you all understand. Now, what does quite oversold mean? That means the VIX is going to bounce and the market is going to fall. And it's going to happen this week, and then it's going to try to recoup. So the VIX right now is getting into deep oversold zones. The VIX probably will hit 42 by tomorrow morning. At that point, be careful, because intraday, the VIX most probably will do this. And mark my words, I've been dead right on this so many times, it's not even funny. The VIX will come down here to the lower Bollinger and attempt to bounce. At this point, it'll be deeply oversold by tomorrow morning as the market opens Monday. And then if it starts to turn around, you better reduce your long positions. I'm talking general position. I'm not talking like everything. Things can go up against the market. We've seen that. I'm talking general market stuff. As the VIX starts to bounce, because it's getting so oversold, you're going to see the VIX bounce again. And if it breaks out over the downtrend line, that's known as a falling wedge right there. A falling wedge looks like this. Keeps on going like this, just the way the VIX did. There, it's going to make a move. And don't be surprised if the VIX hits 70 and the markets fall another 1,000 points after going up 1,000 points in the next 24 to 36 hours. Welcome to the world of the new normal. So the VIX is getting quite oversold, just so you know. The weekly VIX is telling us, no, things are good out there. But even on the weekly VIX, I mean, the weekly VIX is the only stochastic, is the only internal indicator that I can see, which tells us there is a lot more downside to the VIX or the volatility index. That means there's a lot more upside to the stock market. That's the only charts that are telling me that. And that's on the longer term chart. Shorter term, the market's going to say, hey, I'll go up 1,000 points. I'll give back 700. I'll go up 300. Maybe I'll give back 200. Then I'll go up 600, i.e. get used to volatility. And we're coming into earnings reporting. Oh boy, there's going to be a lot of volatility. All right, I'm done for showing you guys what I have to show. Any quick questions, certainly on any stock and stuff which you want to look at, and I'll certainly put my 2 cents in.
Frank, what happened with that UTX trade that turned to RTX, that Raytheon?
It merged into Raytheon, so you will be seeing Raytheon. It was a merger, so you will have the money. You'll see that a different symbol on it. So if I look at the chart, hold on. I'm sorry, I was munching on some macadamias. This is your E-minis right now, 75 points. If it takes, one quick second, I'll answer that for you. Heisenberg, this red line here, that's 2608. This is what we are doing right now, 65 points. After all this massacre, this is years and years, going back to 2011. These moving averages are still the same. What is that telling you? The bull market's broken? I don't think so. Look at these two lines. They're still going sideways to higher. Very good side. We're generally it very much bottoming. So let's take a look at UTX. So at this point, you will see a different symbol on it Monday. And at this point, it is still trading under UTX and shorter term. And the chart still looks pretty damn good. Same reasons that we bought it. And of course, we'll move ferociously with the market because all these defense, also they're in so many other industrials, including the oil patch, companies will bounce very hard. So I am looking at the stock still to move up towards the 93, 98 level. And this is, again, just like the market, ladies and gentlemen, a cup and a handle.
Yep.
So
it's trading under RTX now.
It's trading under RTX. You've already.
Yeah,
my apologies. My apologies. I was looking at the screen. Yes, it's trading on the RTX because I had the screen and the UTX was still there. It's trading under. I stand corrected. It's trading under RTX, which is putting it out here. 1 second. At the time that I bought the calls, I forgot that the merger was taking place. Just so you guys know. Now it has broken up into two different other companies, Otis, OTIS, the elevator company, and also these charts haven't been adjusted, so it has to be adjusted, and not by me, by the system. And the other one is Carrier, the air conditioning company. So they kind of broke up and did the merger. So by tomorrow or so, you will see the value of that on your side of the screen.
All right.
Yep. It takes about a day or two for them to settle, because right now the options haven't been adjusted yet. Correct? Have your options been adjusted?
Yeah, they converted to RTX, but it's showing a $0 to $10 spread.
That's what I'm saying. So you will see the actual value of that starting Monday or so. Okay. Anybody else? Anything? Nothing? Okay. Want to highlight distressed property? Yes, I'm a real. I should be in Arizona. Real snake oil salesman trying to sell you every single cheap property out there. Just kidding. When we talk about distressed property, we're talking about stocks, right? So one of the most distressed properties for term that I bought up on it nicely, even with the markets down, Shopify. All right. So Shopify is. Let me look at it. Daily chart. There we go. So Shopify, this minor candle, we bought it here around. Shopify was up on a day the markets went down. Shopify was up 6 points. At one point, it was up 17 points. Okay, and that's this candle here, right there. So let's zoom in. The ones that we bought is way out of the money. We bought the gap. We bought the 420 calls at around 2 and change. They went to again, market distortion. The spread is like a mile wide, 215 to 450, but they could take it off your hands at $3.50. So you're up 50% on that on Friday. I like the stock, and I would look at it on an hourly. This is the chart that I'm looking at on an hourly basis. It could slip and slide, but I'm liking it. I'm playing it, and I didn't pay much at all for the calls. $2 and change, way out of the money. Somebody might say, why'd you buy so much way out of the money? I said, because of this. Even, and what's great is the stock is very elastic. In other words, the options move hand in hand with the stock price. I love it. And as an option trader, who doesn't? So at this point, I am looking at 402, 370. It's 357 right now. Shopify doesn't move around like, oh, I'll be down $2 today. This is not grandma stock. This is not grandpa stock. Okay, this is a high beta, high volatility stock. It will move 15 to 20 bucks a clip, up or down. So if we do slip and slide and the stock goes to 320, I will most probably get stopped out. I would stop loss roughly 70 to 80% below where I bought it, or I'll just hold my nose and buy it here. Okay, because I believe the stock will bounce up to somewhere around 380. These are different gap fills and all that stuff from the long-term charts, and I believe that the stock will hit this gap here at around 410, and it's going to happen very, very quickly. If it doesn't, call me a moron, but hey, I'm a trader. So that's what I'm looking at. So nobody wants to have me look at any stock? Okay, I like it. Like it. No other stock anyone wants me to look at. No other positions that you have a little bit extra money in that you are worried about, which you all should be worried about, or anything. Nothing.
Regeneron.
Okay. What can I say about Regeneron? The stock just wants to rip the heads off and go higher. Let's take a look at Regeneron on the weekly. Let's take these two lines out. See, generally on an exciting, like uptrending, multiple week bull market, like people have a lot of ideas. Hey, look at this and look at that. So this is perfect that nobody wants to look at anything. Most people I'm talking about, because they're just like, oh man, it doesn't matter what he says, what these technical says. The market's going down. So this is normally how bottoms are created. I'm being dead serious. It's a good thing. It's a very good thing. I'm not being sarcastic. I'm just telling you straight out. It's a very good thing that I'm not hearing from anybody like, hey, take a look at this or take a look at that, besides from Heisenberg, of course. So it's a good thing, behaviorally speaking. Let me get my pen. Regeneron is a stock which is just, in my opinion, it's just one of the finest American companies out there. No question about it. So if I look at it from a technical standpoint, grab my pen. And I have much more technical charts on Regeneron, as you know. I'm looking at the stock at, well, above 5, I already got it. It did that on Friday, by the way. Okay, it went to Regeneron Friday at one point, went to 503, right there. It went to 503.26. I had it at 503.78. Okay, this is a weekly chart. The previous week, it went to wherever it went to, which was, let me see the price, right there. It went to 518. The stock from this is a weekly bull flag, no question about it. Now, unless their whole antibody trials to find a cure for coronavirus, that's not the only thing they do. Regeneron basically they have so many successful clinical trials. They work with Sanofi and everything. Just recently, they had some big clinical trial that was very successful with Sanofi. So coronavirus is a separate issue that they're working on, because they are the world leaders in identifying antibodies which can fight the virus once it gets into your body. So bottom line is the stock can go to 550. Now, if the antibody thing doesn't work out, expect the stock to fall. Now, that's a longer term picture. Shorter term, this is what it looks like. Let me clean this out. You can trade this stock. You can swing trade this stock. You can do whatever. The options, again, market manipulation. Nothing I can do. I get pissed off at it. Nothing I can do. Who am I going to complain to? Chicago Board of Options Exchange? They're a bunch of pirates. Philadelphia Exchange, most of them are not on the floor even. So the electronic market makers are distorting prices by keeping bid-ask prices. Like in Regeneron, it'll be like $4, $9. Like what? It's unbelievable. I'm sure all of you are real traders, so you know what I'm talking about. So bottom line is, it's pathetic. There's nothing I can do about it. So in the meantime, you got to juggle for prices in the middle, but they move. So 518 short term on the tops. I'd love that. I would love 504 at the open tomorrow. I'd love that. Everything here looks good with a top at 518. So that's basically it. Don't go nuts buying way too many of these calls. They are not that cheap. So I'm looking at, and so if you fall, they don't feel too good either. But it's not your fault, because if you're trying to sell them, they'll give you the worst price with the spread. If you to buy them on the other side, the price will have it like a $4 spread. I'm sure you guys understand what I'm talking about. If you don't, then I don't know what to say. So yeah, so Regeneron 500, 510, 520. On the low end, I am watching the 480 level as a major support. Below 480, I'm not going to like it. Till 480, I'm going to be okay, and I'll be a buyer. But below 480, that means something else is going on. So I know I'd like it to stay within 490 or 486 and 496 and 503, $7 range, $8 range. I'm okay with that. I'm sorry, not $7 to $8, the $14 range. I'm fine with that, because above that, it's just going to boom. If they do find the antibody cure or something which is really hitting close to the coronavirus thing, then the stock will jump 30 points, just like that. Boom. You hear the click on my finger? Watch. I'm trying to do some sound effects, guys. Come on, have some humor. That's 30 points. That's 60 points. Just kidding. 20 to 30 points easy. It's a big boy stock. Okay. Nobody else? Anyone? I gotta go. 10 o'clock. 1 minute. Yeah, go ahead.
Just real quick, thoughts on Apple?
None. Actually, just kidding. Just kidding. I'm gonna pull it up. I'm going to chart-wise. There are no thoughts. Netflix. There's so many stocks I can talk about, right? Netflix is my hot pick. I think the stock's going to zoom up to 400, and it tried to do that so many times. Facebook I like a lot. Amazon, I can't even touch the options because they're freaking so expensive. Shopify I like. Tesla, what can I say? My 2, 3, 4 cent calls, boom, they were at 50 cents, 60 cents the next morning. So Tesla's okay. Apple, if you look at the longer term picture, this hi Paul, sorry I didn't know you were there. The longer term picture, technically the stock has support at 231. 231. That's the gap fill we talked about. I would say, and again, on a shorter term basis, on days like tomorrow, Apple with the futures opening up, let's say it opens up at 75, Apple's going to open up $6, $7. So question is, it's become a real trading stock at this point. All right. Now, if somebody asks me, well, what do you think your longer term view is? My question is, well, let's see how their sales, now that China's opening the stores and stuff, do we get a surge in sales right off the bat? That shows there's a lot of pent-up demand. The second thing we want to hear from Apple is what's going on with the 5G stuff. Qualcomm said things are good. You know, others are saying that nothing has derailed. AMD being one of my strongest stocks on the other side, NVIDIA too. So, but if Apple says, nah, the 5G is going to be delayed, I can assure you Apple's going to crater down to 200, and it's going to take the market with it. But I don't think they're going to say that. So you can trade. Apple has become a day trader stock right now. On the daily, you can have both a bullish and a bearish perspective. Here's your bullish perspective from a technical standpoint. You can go like this. Don't even forget about starting there. Just start here. The 270 mark, the 34-day moving average. So you can say, hey, look at this. That was huge move on Apple, by the way. And remember, if you don't catch these babies when they're cheap, you'll never catch them when they're higher. I'm telling you that right now for everybody who's sitting there saying, oh, you know, I'm going to buy when things are okay. Because when Apple moves, it moves 15, 20 bucks nowadays. I've never seen anything like that. Right, Paul? It's just like mind-boggling. Like, you know, the options are going nuts. You cannot buy them on that day. Those days you want to be sellers. Those days you want to be sellers. So how do you become a seller on a day you don't own anything? Because you got to buy it the day before. Yeah, real simple. So Apple at this point is the bullish case point is okay. We'll slip and slide a little bit, and then we're going to make a move towards 251, which is a 20-day moving average, which the stock will most probably open up tomorrow if the futures open up here. $10 is almost norm like on Apple these days. Welcome to the new normal. And if it blows past here, 270. So 270 short-term max upside, which is a lot of money from here.
Yep.
Okay, so that's your bullish point, that the W pattern. On the other side, 1 second, the bearish picture is this from a technical standpoint. Let me get my pen. Let me get the pen color, make it into a red. And come on, 1 second. There's your pen. So the technicals, they'll say, hey, look, this is the stock. It's a head and shoulder with a defined head, left shoulder, right shoulder, neckline at the 220 at that 220 level, and the level here at 230. So in other words, the stock is destined to go down another 20 points or so over the next short term, like within a week to 10 days, and it could certainly do that depending on what we hear from the tech world on what's going on. Yes, follow-up question, Paul. Go ahead.
No, I was just going to say that those are great thoughts. Thanks very much.
Yeah, and a lot of it depends. In fact, all of it depends on the type of vibes and wordings and everything we're going to be hearing from other companies, Apple suppliers, other tech companies, the Broadcoms, the Nvidias, the AMDs, these big shots, the Microns, chip related, both on the 5G side, both on the PC side, where they're saying that, hey, sales will be very strong because laptops sold like crazy because of the coronavirus and the stay-at-home impact. Desktops flew out. Lots of chips got sold. AMD is one of the masters of that. I like AMD's chart is looking really, really good. And that's the last thing. So yeah, so anything. So just to stick to the point, anything coming out from that sector is going to have an immediate impact, and of course the markets react like real quick. But unless somebody says something really bad, I think the stocks are pretty cheap. That's how much cheaper can you get? I mean, Apple didn't come out and say, "Oh yeah, everybody, we have come up with the coronavirus cure. You buy an Apple iPhone 9, which they're looking to release, and if you dial the phone, you will never get the infection." I mean, I'm half kidding. They never say anything stupid like that. It's a joke, guys. So if somebody takes me seriously, don't please, So the bottom line is, none of them have come out with any bullish prognostications or forecasts. They are being realistic, and I think that's the way they should be till we see their numbers. So I like that. So AMD, for example, I trade the stock. All of them on the daily basis look like they're coming down, retesting, and this and that. Hourly charts are easier to trade. And again, AMD tomorrow, I kept on buying the cheap calls, will most probably open up around 40. I mean, if it not 45, not $3 higher, like 43, 44. That's good for 60, 70, 80%. So at this point, a lot of these great companies, long-term, short, are looking at nothing wrong in this picture. Deep oversold. Inside candle. I'm still looking at the stock at 50. I think their sales are going to be very strong. Both some of the big wigs have said, like AMD is going to be one of the big beneficiaries, and AMD, Nvidia, and a couple of other companies because of this whole gaming thing. Gaming sales are going through the roof. You need more powerful computers to run games. And this is an inside candle on the weekly, and that's good. So once it crosses the 20-week, which is over 46, I like it. Calls are cheap. You can buy a lot. You can buy some. It doesn't hurt. To buy a call at $1.60, $1.70, $1.80. It hurts when you're buying a $10 call a pop. Seriously, okay? Especially in this type of market. Then you see it plummet down to $6. It's like in half an hour. But you buy something at $1.60, it goes to $1.20, similar type of percentage, but it doesn't feel that bad. You buy a little bit more. So yeah, so I like this one a lot too. So that's it, guys. We covered a lot of points. I want to keep you up. Get ready for tomorrow, this week. Let's pray that the number of casualties and fatalities because of this deadly virus, and let's not joke around, guys. This is a deadly virus, okay? And that starts to decelerate. Let's look for better days ahead. Market is very frustrating, no question about it. But if you're not in it, you're never going to get the gap fills or whatever, up, down, whichever way you are. In the meantime, stay involved, stay selective, don't go nuts, and try to be very focused on the charts. That's basically the only suggestions I can give you all. God bless you. See you guys tomorrow morning. Thank you for attending.